Sanjay Dutt, Director of Quantum Security, also joins us from Delhi. Sanjay, good morning and thank you for joining us. Sanjay, looks like markets have rediscovered momentum. It's turning out to be a good week of trade for Indian markets.
I think it's some sort of a pre-budget rally that's panning out. In addition to that, the global markets are in a sweet spot right now. People aren't that concerned about what's been happening in Iraq. That's in the prices more or less. I think that it's more so because U.S. dependency on oil from the Middle East has gone down substantially, or in fact, U.S. is going to turn into a exporter soon. And the combination of these factors have been positive for the global markets, and in addition to the expectations here in India from the new government, a combination of these factors are playing out positively for the indices here.
Sanjay, a nice big move coming in the auto basket yesterday. Of course, it was backed by first Maruti's, great performance in the June data. What's the sense that you're getting? Do you think there's a nice little rally in place for autos, which is here to stay?
No, I think it's a little early to celebrate because, in my view, the auto numbers are going to be lumpy. It's going to be, a flip-flop, a good quarter and a rough quarter, because we still don't have that confidence. We still don't have low interest rates to actually spur buying. I still see banks and institutions trying to push auto loans. So I don't see really a robust demand. And in case we're going to talk about the overall consumption story cooling off a little because of monsoons, etc., and inflationary impact being felt on household budgets, continuing for a while, the inflationary impact. So I think it's too early to celebrate the auto numbers as yet, because I would watch a quarter or two more.
So you will not be a buyer in auto, but would you be a seller in auto then?
Yes, I think if I do get good days where we see 3 to 6% rallies in the in the large market cap counters, I would want to sell them and look for better opportunities to buy in, because I think the sector is on the upper end of the range, and fundamentals do not justify another 20% or 15% rise from the current levels. No.
Sanjay, start of a big move in, some of the metal names, led of course by Hindalco. What's your positioning when it comes to metals? Too risky to put your hands in, or do you think they too are now at the, cusp of another big move?
I think that's one space I'm very optimistic on, because of 2-3 factors: that demand offtake is going to improve. Pricing power may not really increase because, we've got issues that are there out of China, etc. So global metal prices aren't really going to shoot up. But domestic offtake is going to increase substantially. I think input cost pressures may ease off a little, plus fuel linkages, those kind of issues that some of these companies have faced, those will also get eased off in the months ahead. Besides, the sector has underperformed and is under-owned to quite an extent over the last few years. A combination of these technical factors and some fundamental changes, I think the sector will continue to outperform for the near future, at least for the year or two. And in addition to that, what is fundamentally changed in this whole equation for both ferrous and non-ferrous metal production is that it's going to be very difficult to now increase capacities or add capacities for new players or existing players. Given the issues related to environment, land laws, etc., it's not going to be easy to set up capacities over the next 5 to 10 years. So the existing players are going to benefit substantially, because some kind of competitive barrier has already been set in because of the regulation and the policy changes that have happened in the last few years. So this makes me a little, I think it makes me very positive. But this is a little in the longer term that I'm speaking about. But overall, I'm optimistic on the sector, yes. I'll have a long position there.
Okay, Sanjay, we've discussed two large groups, which is autos and metals. But the real action, the real fun, the carnival feeling is there in the mid-cap space, in the small-cap space. What do you like as a theme from those verticals from those groups?
Because there isn't any specific theme there as such. I would go bottom up completely because across sectors there are opportunities there. Well-managed, good quality companies which have had problems in terms of, orders, in terms of being able to restructure their balance sheet, etc. All this is beginning to get it sorted out. Quite a few of these companies may come in to raise capital also to sort out their balance sheets. Their margin expansion would be huge because, they've been sitting, they've really tightened their belts over the last 2-3 years. And as soon as things start looking up for them, they'll all benefit. To sum it up, I think one needs to go bottom up across sectors. You'll find winners in FMCG, even though you may think their consumption story may be challenged or FMCG may be fully valued. Similarly, you may find many bargains in the pharmaceutical sector. One has to really be bottom up in the small cap, mid cap space.
As a house, you have a bullish outlook for PSU banks and especially mid-tier PSU banks. But poor monsoon, sticky inflation and appreciation in bond yields, will they challenge your thesis?
I think only in the short term, Nikunj, maybe in the next 3-4 months. But I see if the economy picks up and the government's focus moves on growth, particularly what I sense is that over the next few months, the government is going to aggressively focus on creating jobs, and that too in the SME space, and is going to really address issues that concern the SME sector. And that's one area where I think that, tier 2 PSU banks are way ahead of the private banks. So, in my opinion, that, even though next 2 to 3 months may be a little challenging because of monsoon, etc., but I think our call on PSU banks remain. You may, in fact, actually get an opportunity to buy them cheaper if what you say and what we all think is going to pan out in terms of bad monsoon, inflation and bond yield, etc. I think those could be opportunities to buy in because the story is big there. The rally is not going to really, die out that soon in the banking space. So, good quality PSU banks, the ones still trading around 1 times book or less than that even, with, relatively clean balance sheet, low NPAs, are the place to be in our opinion.
Just the last time we were chatting, you were talking about your bullish stance on names like a Vijay bank, and you said that you're bullish on this one, from a time frame of about 2 years from now as well. What's the rationale behind that?
Just exactly what I was telling Nikunj a while back, Aisha, that, second tier PSU banks, clean balance sheet, reasonably good growth targets. I think achievable growth target for the next 2 years, what the bank has set for itself. It's a conservative bank with a reasonably good branch network, about 1,600 odd branches, and trading at a very reasonable market cap at this point of time. One of the lowest NPAs in the business as far as second tier PSU banks are concerned. So these are the primary reasons why I feel the bank will do well. They've got aggressive growth targets internally, and I think those will be achieved by the management because they're very committed management across all the regions and zonal level. We're quite optimistic about that, and I think we have a buy report on that. It's probably out yesterday, or it's coming out today or tomorrow. So therefore, there is a conflict of interest there when I talk about the stock. But I don't have a position myself. My company does have a buy recommendation on it.
Sanjay, it's getting a little wobbly for the oil and gas space. Firstly, with the deferral of, the gas price hike, which is now going to come about in, say, 3 months from now. And then, of course, the recent fuel price hike that we saw over the weekend. How is it that you're approaching the oil and gas space? Because we're seeing very sharp moves, spike up one day and then immediate profit taking the other.
Yes, the sector's got quite volatile after the run-up over the 6-9 months. But I think bad days where you get these 3-5% down movements in select stock should be days to buy into it, because over the next 2 to 5 years, that's one of the space in large caps to be in. It'll outperform most of the large cap sector stocks. And I think the reason why I believe in that is because there's going to be substantial clarity and cleaning up on the regulatory front. That's one thing I'm confident this government will do in the first 2 or 3 years of its tenure. Even though, the price hike has been delayed on the gas front for the next 3 months, it doesn't really make a difference, because I think the whole sector would be cleaned up, just like what we saw in telecom over the last 2-3 years. This is the next sector where you'll see a lot of cleaning up happening. And in fact, overall in the energy space, I think a lot of the regulatory issues will get sorted out. And oil and gas is definitely my top pick in the energy space.